So today in this video, I want to show you the tools I use to get in and out of the market with confidence, control, and conviction. It's a very repeatable approach. It's a simple but effective strategy that helps me identify the areas that have tons of volume and trade with the trend and understand the market conditions. See, the market is an insanely unstructured environment. There's so many different variables, there's so many different strategies, there's so many different ways that you can get in and out of the market. But we all need our favorite tool. If you are building a house, if you are building a bench, if you are building a car, it doesn't matter. You need that tool, that effective tool that you're confident with, that you know how to use it. You know that tool inside and out. You know its weight, you know its purpose, you know exactly how it serves you. This is how you must approach the market. See, until you have a very simple and effective way and it's repeatable, you're never going to get consistent results. So to get consistent results, you need a strategy you love, that you trust, that you know inside and out, that you've back tested, that you've got data on, that you have faith in, right? You know it's effective because you've done the numbers. This is exactly what we do over at High Performance Trader, right? Over here on the Discord, we log every single trade, we back test every single strategy, and I send out weekly PDFs on the setup, right? Let me show you guys. This is October's data right here that I'm going to make a video for our setup. This is exactly what I look for each and every single day. It's called the HBT cross, and in it has three very specific but simple ways to identify it's happening. See, so many traders, they don't have a specific, repeatable, easy approach, so they just show up to the market hoping that they're going to have a great day. How could you ever expect to have a good day on the market if you are not aware of what your strategy looks like? How can you stare at it and understand it's there if you don't have specific requirements that it must meet for you to actually pull that trigger? And that's what High Performance Trader is all about, right? We need that tool, that one that we live by, the one that we trust, right? We trust our pin numbers, we trust our moving averages, right? We trust our market structure, we trust our RBI, GBI entry, right? So guys, in this video, we're going to break down how I had the best day I've had all year with two very simple trades. So the day we're going to be talking about is 10/30/2024. These are the two trades I took. Very simple, right? You can see here, price rallies above end of day, comes down, tags end of day, buyers defend it, and then we get our red bar completely ignored and we target previous day high, right? And then once we hit it, we take our profit. Buyers cannot defend previous day high, we fall below it, and then we short back down to EOD and open print. Very simple. So my goal is to help you guys understand what it is I'm talking about, the strategy I use to see it, and how this helps me trade with them confidence, control, and conviction. So every single day I identify four main critical levels. We call these the pint numbers. These are called the pint numbers because they derive from the pits of Wall Street. Before there was computers, before there was all these tools that we have today, traders only knew of four main levels from the previous day. They usually found it in the newspaper. And the reason why these levels were so significant was because the volume that goes into these levels. See, when large money makes their move, it usually reverses the market, or it's usually an area that started at the open or the end. We know this because every single day, if you look at the volume, you'll see how high it is. Look at the volume here at end of day, extremely high. Look at the volume here at open print, extremely high, right? So we may not know what large money is doing at that moment, but we at least know where they are. And then if we can learn to study what chart patterns mean, we now have a story, a book, a blueprint. If you can understand what a bullish chart pattern is at open print, you have a higher chance of price continuing in the upside direction. So that's the philosophy behind our strategy. We call it identifying and adapting to market conditions. We do not predict them. We don't try to guess them. We react to them. And when you're watching the correct levels, this is what helps you make way better trades. It keeps you patient, keeps you disciplined, and then with the correct entry criteria, which I'm going to go through in this lesson, now you have yourself a phenomenal trading strategy. So going into the day, hold on, let me just fix my chart here because now it's all out of whack. Okay, so going into the day, every single day, I identify our 4 main critical levels, right? So let's whip out the Discord and run through the pre-market plan and exactly what I was talking about and looking for. So once again, the day we are discussing is 10/30/2024. So over here in the Discord, I post pre-market plan each and every single day. It's got to be bullish. It's got to be bearish, right? Because my main goal is to approach the market from a non-biased standpoint. Okay, so right here. SPY pre-market plan, bullish scenario, watching end of day in the 1 hour 50 EMA close this morning. Looking for buyers to keep price above these levels to determine buying acceptance, and upside targets are PDH, pre-market high, and 58449. So basically what I'm saying is, guys, look at end of day. We have the 50 EMA right next to it on the 1 hour. This is where my moving averages come in, right? Pit numbers, moving averages. The reason why we use moving averages is they are a very simple tool that help us understand who's in control. Are buyers holding the moving average? If so, trade with buyers. Are sellers holding the moving average? If so, trade with sellers. You do this very simple rule. This is one of my tools I'm giving you. You learn to identify who's controlling the moving average at the critical level. You, my friend, have a massive edge over the market. It's a very simple way to stop predicting. That's why this strategy is so effective. Because the way I've set up this system is that it keeps me from predicting things. On the contrary, it keeps me in a more reactive state where I'm looking to see who's taking control and then I trade with them. So that's our bullish scenario. Our bearish scenario is if sellers take control of the 1 hour, the end of the 1 hour 50 EMA, EOD, and open print, I'm going to be bearish, looking to play puts into previous day low. Very simple. And what this does, right, is staying a more conservative approach when it comes to your pre-market plan keeps you in a more creative mentality. The last thing you want to do is go into the day in a very analytical way where you can only see one setup. See, we humans, we have bias. Bias allow us to perceive market information in a handicap way. When you are biased, meaning you can only see one side of the story, you, my friend, start to make terrible decisions. This is why when traders are in losing trades, it's so hard for them to cut them. It's so hard for them to get out because their mind is literally shielding them from their perception so that they don't focus on the opposing candles, right? Your mind is a very strong tool. You have to learn to use it the correct way. This is why my pre-market plans are very brief but effective. I'm looking at the specific levels and the moving averages to determine who is in control. That's it. So then the market opens. You're going to see here we got extensive selling, but there was no retest of open print. So for me, there's no trade. There's no moving average cross. So for me, there's no trade. There's no move off the critical level, so I'm patient, and price rallies into previous open print, and then buyers show up. Let me just get rid of this. So now buyers come into the market like a bat out of hell, and we rally above open print. So now we identify open print, and we go, all right, this is a area of value. This is a level we're going to want to watch. Why? Because all the volume. Remember, we have to watch the critical levels. This includes open print. Price rallies above end of day, and now we close above the 50 EMA. So now how my strategy works is, now that we're getting the moving average cross, and let me just throw up the HPT cross here so that we can see it. Right? My HPT indicator goes off and goes, hey, buyers are here. This doesn't mean enter the market. This means, hey, with the proper retest and entry criteria, get in the market and target previous day high, right? Because the market is always going to go up to the next imbalance. There's an 88% chance, I'm sorry, not always, but there is an 88% chance that the market is going to gravitate to the next market imbalance. This means from critical level to critical level. If buyers hold end of day and open print, there's an 88% chance that we're going to go up to PDH, right? And vice versa to the downside. So price rallies up into previous day high. The market imbalance is complete. I never got an entry, right? Now, Josh, why didn't you enter? Well, there was no green bar that, or in this case, red bar that was ignored. See, you need very specific entry criteria. Otherwise, you're just going to be shooting all over the place. Your emotions are going to get to you. You're going to get confused. You're going to get restless, right? You're going to get FOMO. You're not going to want to miss the setup. So next thing you know, you're going to get in at the absolute worst spot. I used to do this constantly, right? You don't want to miss the move, or you get super conservative with your approach and you just want more evidence that the move is actually happening, and then once again you end up getting in long at the worst spot. So now I'm extremely patient. I missed my move, I missed my setup, but it's okay because our approach is extremely repeatable and I know it's going to present itself again. There's no point to chase if you know it's going to repeat. Price comes down in the end of day. Now we're going to flip into the 2 minute. So as we come into the 2 minute, or as we come into end of day, it is now our job to identify who is in control. Price looks like this. You can see there was no red bar that was ignored for me to get in earlier. We just got tons of buying. And it wouldn't, I'm not saying don't long end of day to PDH, but I'm just saying calculate your risk. I'm very calculated risk taker. I need a red bar in this scenario to put my risk underneath it. And I'm about to show you what that looks like. So you're going to see here, price comes in the end of day. It's our job to understand who's in control. How do we do this? Well, we do this through the moving averages and through candlestick analysis. So price comes into end of day relatively bearish, but I don't want to short the market because we're still above the 1 hour moving averages, right? I do not want to fight them. Instead, I'm looking for buyers to take control of this level. Price pops up, rips into the 50 EMA here on the 2 minute, and now we get a red bar. This red bar is everything to me because this red bar is going to become my risk when I go long. Now, once I get a red bar here that was completely ignored, what does that mean? Well, let me show you. This is very important, guys. Price comes into end of day. We get buying. Price rips into the 50. We get a little bit of selling. Now, these buyers rip up through this red candle. So I'm going to show you guys my exact entry here on the Discord. I called it out for the team. This was over here at... Alright, right here. October 30th, 2024. I put in longs targeting previous day high. You're going to see price coming down to end of day. We get that red bar that's ignored. I'm in the market long. This is at 11:25 a.m. I go, let's get previous day high. And then I flip back to the 5 minute. You guys see that? It's very important. First trade, 2 minute. Identifying the sniper entry with risk accounted for. Flip straight to the 5 minute. We're taking back the 50. We're holding the green EMA cloud. This is very bullish. Let's get PDH. Price literally rips in by, what is this? By 11:29 in 4 minutes, targets hit, and I trimmed it, right? Beautiful move, 38% ROI here on SPX, right? Very simple trade. Right there, right? 11:25 was right here is when I called it out for the team, and we were in the market long, capturing a quick dollar move to PDH. Very simple. Very simple trade. But it took a lot of patience. It took a lot of discipline. And it took a lot of awareness and very specificness, clear entry criteria. Otherwise, I would have taken plenty of dumb trades before it. This is why it's so important to be clear. It's so important to know exactly what you're looking for so that when you see it, you take it. But more importantly, when you don't see it, you don't do anything. Right? And then let's go to our next trade. All right, so you're going to see here at 12:59, I get in shorts targeting open print. And this is what it looks like. This is an SPX chart, but it's still very similar. So right here was the long play we took off this green candle up to previous day high. And then sellers lose previous day high. How do we know this? Well, let's go over it. So price rallies above PDH here. I'm going to flip back to that 5 minute because that's how I monitor things. And then I get my red sell indicator, my HBT cross to the downside, right? And all this is very specific way, graphical way to show me the moving averages have crossed. We're very simple creatures, right? You don't need to be the smartest person in the room. You just need to be the most observant, right? And when I see my moving averages cross, when I see my HBT indicator go off, that's a red flag for me. Going, hey Josh, something's happening, conditions are changing, you need to watch this. Where's your criteria at? Right? So you're going to see here, where did I go long? Hold on. What time? At 12:59. Okay. So you're going to see right here, right? I got it marked out. So right here on this red candle is when I got in the market short. Why? All right. Well, let's break it down. So market falls below previous day high into the 50 EMA. Now this is why I love my moving averages. Because two things can happen here. There's two very high chances that if buyers hold this, we're going to rally, or if sellers hold this, we're going to sink. That is how I view the market. And of course, there's billions of scenarios that can happen. But I don't need to know every single one. I just need to know what happens most often. Now, if buyers hold it, I'll be able to tell. Why? Well, because we won't be able to close below it. Now, if sellers hold it, I will be able to tell. Why? Because we will close below it. Right here at 1240, we close below the 50 EMA. So now, just because we close below the 50, I don't go short, right? I don't go, oh, there's a very high statistical chance that we're going to sell off now because we close below the 50. Absolutely not, because I can't identify my risk. I need to be able to identify my risk. That is the most important part of this whole scenario. And the only reason why this strategy works as well as it does is because your risk reward is as high and tight. It's a very easy way for you to identify risk, and it keeps you very patient. Price falls below the 50. We get a green bar that's ignored. And right here at this 1255 candle, I end up getting in the market short with my stop above the green candle. My first target's end of day, and you can see here, it's so cool how it works, guys. Look at this. Look at the green bar here. That was completely ignored off the 50, right? So when the market looks like this, just know it's a very high chance we are going to sell off into downside targets. The cloud is red. Buyers could not hold previous day high. We sold below the 50, and we got the green bar that was ignored. And we got a beautiful move all the way down to open print. You can see here, 582.30 stop. Very nice move here. Ripping into the 50 EMA, rejecting even nicer, targeting downside targets, right? Target hit right here. Bam. 10% of my position left right here. Bam. Out at 137. So basically, guys, in a nutshell, right, what I want you guys to be able to take from this video, right, is I used to struggle very hard with staying patient and having a very specific approach. What is my approach? What are my tools? I trade off the pit numbers, right? I trade with moving averages. I need to understand who's controlling them. I need to understand what healthy relationships look like between price action and the moving average. I need to understand what unhealthy relationships look like. I trade with market structure. And I have very specific, clear entry and exit criteria. These are my tools. I've learned to use them very well. My goal for you is to find your tool. Learn how to use it. Get very good with it. If you want to learn to use ours and trade with the team, you guys already know, click the links below. Trader Bootcamp promo is going into the end of November, right? Guys, we're growing a very strong team that focuses strictly on becoming the absolute best version of yourself. I'm Joshua Salvetti. If you stayed to the end, you already know you are a GOAT, and you are the ones that are willing to put in the work and become the absolute best. I'll see you in the next lesson.